Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have. First of all, the bearish EMA targets are getting hit. Basically, every time we get a bearish cross, price always hits the EMA below. That one was sitting around 99K and change. The time window for that move was 1 to 3 bars on the same time frame, and now on the second bar, we see this level getting hit. So this EMA cross setup continues to show a really good hit rate. Now what I'm looking for, of course, is how far it goes. Because we had some stats showing that we might not see the full 20% drop. But to repeat the levels, a 20% drop would be around 80K, and a 10% drop would be in the upper 90s, basically the lower part of the previous range. The main point is that the target was now cleared. Now we look at the weekly Bollinger Bands and the EMA. Last time, we looked at similar situations from the past, mainly the bounces that happen when price touches the lower band while staying above the EMA on the weekly time frame. Here, we typically have a deviation below the Bollinger Band of around 4 to 5%, with a maximum deviation of about 11%. Currently, price is more or less on the lower side of the weekly EMA close, and the 10% deviation isn't really far away. Anyway, that would be the area of interest, which again is the lower part of the previous range. And yes, so far, we do see some weakness in price, but it's also now hitting the next support area. For that, we'll switch to the yearly fib time chart and then move to the local levels. On the yearly price time chart, we can see that price was hitting the yearly fib time, where I was looking for some kind of reaction or reversal. We got the reaction and a push higher, but it also failed to break the previous SR level, and now we see a rejection. Price also broke the next support level around 100K. On the yearly chart, for now, the current level is this time trend line for the entire year. That's where we're seeing some reaction right now. The next levels would be the lower fib levels, which, as you can see, are also the lower part of the previous range. So I go step by step, same as before. For now, this area is support, and if it fails, then I'll look for the next level to be hit. For the upside, those same levels are potential resistance now. For a bullish case, they need to be reclaimed. For a bearish case, they would fail and form another lower high. Which side you play is up to you. I just provide the levels, and as we can see, they're being nicely respected. Now let's have a look at the daily cycle indicator. Here I was looking at the buy signals, mainly 4 buy signals, as that was the usual number during this bull run. We had 1 signal and a nice push upward, then a move lower, and another 2 buy signals. The next buy signal will also be coming soon. That will happen when we see a green daily candle. So whether this day ends up closing green or in the next days around the weekend, we will likely see the next buy signal, unless we get a bigger capitulation move down. This situation I mentioned before already. Price can go down in steps, just like in the previous examples. So for now, I'm not really surprised, though of course it's already going a bit deeper than I would like. Anyway, for my plan, I still trade the same idea, and if I get proven wrong, so be it. In the next trade, I'll do exactly the same thing, because over time, I have more wins than losing trades. With that, we also switch to the rabbit box, which is my strategy for spot trading. Here we can see I already had a few compounds. This morning, it hit the last one around 97K. So with that, the position is now fully built for this trade, and now I only need to wait for the target. I have no liquidation on this one, so I'm not really worried about it moving lower. All I need to do is simply wait for the target to be hit, and that's exactly what I'll do. I won't touch it until it hits the target, no matter how long it takes. That's the way I trade it. It also triggered on other time frames. For example, the 6-hour time frame had 2 compounds already. Last time, on the bigger range, it filled them all and hit the target afterward. So yes, we shall see. But here, I just need to wait for the target to make profit. And now, let's switch to the local levels. Now here, I want to show where we are right now. Basically, it's the previous range, split into a range high and low. we can see that price formed a range with a lower part and a higher part. Then price moved down, and this level acted as resistance. After that, we saw a break above this level and a push higher. On the retrace, price retested the upper part of the range, which, by the way, has its own range high and low. So it tested the upper part of the bigger range and the lower part inside it, and then we saw another rise. Now price came back and tested this level again. That's basically our weekly order block, but it's also the upper part of the previous range. Now price is breaking below that level, and the next area would logically be the lower part of the previous range, where we again have both a high and a low. At the moment, price is kind of in the middle between those two. It hasn't really lost the upper part, as we don't have a candle close below this level, but it also hasn't reached the lower part yet. So for now, there's still a chance for price to come back inside this area and leave the level as an SFP. However, if we see a candle closing below this area, then we could get a bearish retest, and from there, likely move toward the lower part of the range, basically, as you can see in the previous range, the midpoint of it. For now, price is testing it from above, which means it's potentially a bullish retest. And since I never front-run a candle close, it's not officially lost yet. Price can still wick below and move up. However, if I see price closing below, then yes, I need to keep in mind the lower levels. Now let's also have a look at the monthly levels and the stats. So here we can see that price hit the level in the monthly average time for uptrends, and we saw a rise from there. At that time, of course, I thought, if the low is in, we look for the high. I don't think that logic was wrong, but this time, we simply see price extending into the average time window for downtrends, which, yes, means a new low may form later. This average time window runs basically until the end of this week, on Saturday, but usually I give it a few days plus or minus. So that means it could be formed now or next week on the weekly open. That's the time window where I would like to see the new low formed, as it already broke the previous level and entered the downtrend timing zone. The average level for downtrends is a bit lower, of course, sitting around the 90K area, which again is the lower part of the previous range. So a lot of levels align with that older range low. I wouldn't prefer price to go there, but, well, that's not really my decision. The stats are there, and they have their place. Now, one thing I'm thinking about is the monthly high. First of all, it's a poor high, just a small wick. And we're leaving a lot of poor highs on the way down, which usually act as magnets. But I'm also looking at the average timing for the highs, and it sits in the same area as the average time for the downtrends. That means either we already saw the high formed early in the month, basically in the first days, which would still be inside the time window for downtrends, as we can see here, or we now had about 2 weeks of down move, and we could get a few weeks of up move, because to make a new monthly high, there would still be time for that. The average time for the high in uptrends is near the end of the month, around the 22nd. That would mean price made a low now and could be rising into the monthly high formation window. So, for now, there are only two conclusions for this month. One, if we see price struggling, then the high was already made in the first days, and we'll need to wait for the next month. Two, if price finds support and starts to recover, then it's likely forming the low now and could rally into the monthly high window later this month. As of now, we're in mid-November, so there are still about 2 weeks to go, and technically, the time window for the highs is still open. And here, I also want to add the lunar cycles. Well, first of all, the weekly cycle didn't hold. That doesn't mean it was a false one. We saw a reaction around that time, but it failed to break structure and made a new low. So for now, it's potentially extending as well. Anyway, I'll update it once it's confirmed. For now, what I'm looking at is the lunar cycle. Usually I look at it to find the low. Yes, it's not always perfect, and sometimes it fails. That happened last time as well, when instead of forming the low, the lunar cycle caught the high. We saw a similar situation previously. Price ranged, broke down into the next cycle window, and from there, it again caught the bottom more or less accurately. Now, the next lunar cycle window would be by the end of the month, which is very close to the average time for the highs in uptrends. Following that logic, we either get the next lunar timing forming another high, like in the previous one, meaning we could rise into that time window, or price could stay here or move lower into that window. For now, it's too early to say, of course, since price can change. It could still move up from here into that time window. But it will get more interesting once we approach that date to see whether it aligns with a high or a low. Based on the levels we've hit, and yes, wicks are fine since this is all a high time frame area. For now, I think we can still see a rise. If price starts closing below this level, then I'd say we're targeting the lower part of the previous range. And we'll see from there. But for now, I'm watching whether price forms an SFP here inside the average time window for downtrends. I'm also still in my long, of course, both my spot trades and the other trade where I add as long as price moves lower, targeting at least 112K. So I stick to my plan. This upper area with the equal highs would be the next target. The question is just whether we'll get there from here or if price will stop out a few more people before the reversal. Now, locally about market structure, the daily is in a downtrend, just like the lower time frames. The daily swing high is at the last rejection point, meaning if we see price breaking above that level, it would be a bullish daily break. And from there, we could aim higher. Until then, the structure officially remains down. If you're looking for rejections, then a retest of this area is where you can look for weakness or strength, depending on whether you trade longs, shorts, or both. Momentum-wise, on the weekly time frame, we can see it's still nicely diving, and we'll need to see where we close this week. Unless it's above 150K, which for now seems unlikely, the momentum will remain down, slowly approaching the lower percentage line. On the 3-day chart, momentum is hitting the lows. To be fair, looking at previous lows, they all had momentum near the 3-day lows, and one of them even had a bullish divergence, where price made another low, but momentum made a higher low. So for now, we're coming close to a bounce, but as long as price doesn't close today above 105K, it remains down on the 3-day time frame as well. On the daily, the key level for today is around 100K. And looking at the averages for today, yes, it would be possible, since the average gain level sits around 101.5K, while the average loss level has already been hit. In this range, we've seen plenty of overshoots, which is normal. More volatility means deeper deviations. But over time, the averages self-adjust as new closes come in. Now, switching to the 1-hour time frame, we also see a local downtrend, logically. The structural swing high here is already pretty low, meaning to break structure, price would either need to form a range low and then a shift, or rise and break above that level. After that, the next one would be the 4-hour swing high, which for now is at the Monday low. Now, also a quick look at the top chart before I wrap it up. Here we can see a lot of poor highs left behind, and even the all-time high has 3 of them. Same story on the way down. For me, I'd like to see those areas taken out before any real bear market talk. What we see now is something different, because based on my stats, there were no usual signs of a bull market top. So either we're getting something completely new that we've never seen before, and I'll have to adjust my stats in the future, or this is simply not the top based on current data. Of course, I have to go with my system until proven wrong, just as you should do the same with yours. So to wrap it up, I would still want this level to be hit at least 112K. For now, the trade is underwater, but I'm holding it. And as always, no financial advice. Best is to follow your own plan and use other plans only as confluence, not as signals, if you don't trade the same way. With that, I wrap it up, wish you a good day, and see you in the next one.